CRTD stock currently in the decline that we were actually talking about a few days ago. How low can this go, or how high can it actually go? Well, let's go ahead and find out in this video here. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a CRTD, technicals, raw price action, and statistical threat of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. With that said, let's go ahead and dive right into the charts. So we are looking at CRTD on the 4-hour chart here on this fine Saturday afternoon here. So we are looking at what could potentially have been a great supply zone in order for us to meet a downside move of both supported by technicals, raw price action, and statistical metrics. Okay, so let's go ahead and just zoom in a bit to see what's currently being built. We did mention that we were looking for a potential incline to the top to test our supply zone, in which case we actually did it just a little shy of it. But we also noticed that this red line here happened to be, let me zoom out, happened to be just near the 786, the not 786 at $1.54. So it was likely for us to also find a retracement here based on many other iterations where we have used this where we have used this place as a point of support and previous resistances. Okay, so there is a pattern also forming in here, and usually this pattern tends to have a bearish outlook, which is in a sense in accordance to what we're looking for here. We were looking for the upside to come and test our supply zone, but unfortunately it did sell off just a little early, like I mentioned. And if you watch my channel, or if you're a regular listener or viewer here, you'll know that I usually call out the areas of interest, but I often mention that there is a potential of us selling off or starting the ascent early. Sometimes when you're looking at a take profit for a short position from this point here to this point here, you'll notice that the short positions will start covering here, so that this demand zone will never actually get touched, and it'll continue on to the upside. It's generally done by professional traders of all kinds. It's to ensure that you do have a take profit zone, and these are the fluctuations that are natural to market movement. So yeah, this was the inverse head and shoulders that we were looking at, or a potential cup and handle with a price objective of the supply zone. We did make a move to the upside. We only fulfilled about 50% that move to the upside before a continuation onto the downside, of which we were already looking for. Okay, so now let me just get rid of these trend lines here, and you can see what I am looking at. This bearish structure is usually I tend to give it some pretty good weight, and yeah, you're looking at a lot of touches right here. And it's interesting that we are looking at it at this point right now. So now just use this trend line here. I can honestly just draw another one here so that you can see. So if we were to make it like, oh, it isn't okay, look. So this is first of all, it looks like we're making a pennant of sorts, or it's an ascending triangle. And usually these ascending triangles tend to realize when we're more or less at about 70% of the to the apex of the triangle itself, 70 to 75 on average. But now that I was looking at that, there is a potential secondary formation that is also bearish by nature. So let me just go ahead and make a quick adjustment here, because it looks like we may be looking at an ascending channel, in which would essentially be for sure bearish. Okay, all right. So yeah, we're definitely forming an ascending channel as well here, you guys. So there is a high likelihood that this can actually face some more downside. We are looking at support from the 50-day simple moving average right now, and we've actually tested it now 3 times. We're going to go ahead and move on to the next chart just to see how much downside we can face, because there is this can fail earlier than let me see. We have 1, 2, Three tests of the resistance usually means a capitulation event for ascending formations. So in a 4 hour term, we're looking at test number 1. Man, this could be test number 2, and we're looking at a potential test number 3 right here, which could very well mean that we are gonna make that downside soonish. And because it's so close here, it only makes me feel like we're trading this ascending triangle in a daily in a 1 hour chart. So if we're looking at an hourly, you can see those tests a little more clear. So you can see the test number 1, 2, and 3 followed by the capitulation event. Usually when we face a downside like this, we actually see a continuation to the downside. Let me go ahead and put it back in the 4 hour. We complete a continuation to the downside before finding some type of support, and which could be these candles right over here. The closure. I'm sorry, the opening of this candle. The closing of this candle actually, and the wick high of this candle could be that support before us finding a bounce to the upside and validating this newly converted support into then resistance before a continuation down to the downside, in which we can then test our demand zone down here. This is demand zone number 2 of 2 that I have right here. So this would be a likely area to look at. Okay, now let's look at our fib to see what we have right down here. Okay, so in the current price action, you can see that we have this. This is where we currently are. This red little dotted line here, which is at about $1.09. You can see that we have now converted the NOT 236 at $1.12 as a form of resistance. So this is. There is the likelihood to where we can face a short-term upside before failing this, and a continuation down to the downside, and finding that support here within these candles before a move to the upside again, and then confirming our newly converted support into then resistance for a continuation to the way down. Let's move on to the next chart. So this is the statistical side of the analysis. You are looking at, new viewers, actually, you are looking at volatility here represented by this indicator, BBWP. Volatility is direction neutral. So we pair it with an indicator, a momentum indicator, so we can get a bias for that direction. In my case, I'm using stochastic momentum. It is a momentum oscillator, so this should be able to give us some good information. On average, I've tested this, I've back tested this indicator in several tickers, and I get a read of about 75 to 90% accuracy in guessing the asset's direction for price action. So it's not perfect, but it's very good to consider. And here you can actually tell that it's suggesting a continuation to the downside. It is on a nosedive, and since the volatility component of the BBWP, represented by this spectrum line here, is starting a pivot to the upside, an expansion pivot to the upside, that means that this can likely be a bigger move to the downside, since volatility is starting to reach the extreme levels, which I consider to be anything above this red line here, the 90% and above zone. Okay, so now from the back test that I performed by hand, which is a back test from the beginning of the trading history, throughout the entire trading history of CRTD, I have back tested this criteria. So I actually need per every iteration, every single time that we have moved above the 90 percentile into critical volatility expansion zones and started a contraction phase towards the downside, I've taken note of that iteration's downside thrust versus the duration of the iteration and the amount of times that the iteration, or volatility versus momentum profile, guessed the downside correctly versus incorrectly. And now the data came back with some interesting metrics. So we do have a total of 15 iterations, of which 13 were guessed correctly to the downside. So you are looking at an average downside accuracy of 86.66%, with an average downside pressure percentage of minus 48.36% over the span of just over 77 days. This is proof of work. Okay, so now adding deducting from the current price action, the minus 48% decline. Let's go ahead and see what that gives us. So this is actually that trend line right here. So since the downside move already started and we actually saw it from up here, this is actually the firing of the signal, which was right about here. And when we were just crossing down into, below the 90 percentile, so we were then crossing alongside the moving average and this and momentum to the downside. So you can see that this 48% decline leads us right to the 2-spot 618 at 70 cents. The 618 ratios are very important for the trade. This is where the sentiment usually likes to take the trade to. Any of the 618s, actually. So that's the 2-spot 618. We have the 3 618, 4 618. We have the 1-spot 618 and the not 618 here. So these are very important ratios to consider. And the fact that the statistical metrics, which by the way are not certainties, are suggesting a continuation onto the downside to this area here is very interesting. Okay, so we are in the immediate short term, we are looking at some bounces of support from the 30-day exponential moving average. But since we do have this suggestion here, it is possible for us to just continue on to the downside. As you can see, the candle structure for the daily chart, it's not looking too bullish at the present moment. Okay, another quick thing to actually note is that we are in a breakout. So this is not a price reversal all in all. Excuse me. What I am looking at is at a large temporary pullback before a continuation onto the upside. So this descending broadening wedge is a reversal of signal, or I'm sorry, a signal of reversal or a reversal of trend. And this is an indication of it. We usually use the golden rule of 3, which we talk about very often within this channel. And you are looking at the test number 1, 2, 3 before a capitulation event, and that is per the playbook of the golden rule of 3. Before an actual attempt of tree breakout on the test number 4, in which we did get this test number 4. If you've noticed here on this candle, on the candle structure, we've never retraced to test the newly converted resistance into now support. I mean, we are suggesting a continuation to the downside to the 2-spot 618 in a statistical metric, which could very well mean that we can actually, flash wick to this area here, finding that support and continuation, and then continuing on to the upside, which Wyckoff theory could call a terminal shakeout or a spring, which is very common in bear markets. Actually, these long wicks to the top or long wicks to the bottom, they happen very often in bear markets, particularly the bear markets. Okay, so now let's look at the RSI. So I've put this here for your convenience for the divergences that I usually talk about. So we did notice that we had 1, 2, 3 primary drives of bullish divergence, which happens when you are creating a lower low in the RSI signal line, which is this purple line, and we're creating a higher low in price action. So that usually indicates an upside move, a continuation. We did get that upside move, and we are now failing it. So we also noticed that upon that upside move, we could possibly be making some drives of bearish divergence, which is from higher high RSI levels and price action higher lows. Okay, so it looks like this is the bearish nature of that is now in play. And the 12-hour RSI is right in the middle. It is suggesting a potential short-term downside, but let's just go ahead and open up a multi-pane here so that we can see what that direction bias is. I've also made a diagram here for the new viewers, new listeners. This is, these are the 4 zones of my RSI. So you're looking at 1, 2, 3, and 4. 1, 2, 3, and 4. It's just blown up for you so that you can be able to tag along as I talk. Okay, so now let's just make this a little bit of a larger pane and go into the immediate short term. Immediate short term is suggesting a continuation onto the downside. It has jumped into the bear strength percentile, and it looks primed to cross. However, we are in the deep areas of the bear strength percentile, shallow areas, which could mean that we could actually find some support soon and bounce right back into bear weakness percentile. The buy hourly is suggesting a continuation onto the downside. It has rejected the bear weakness percentile and it's still suggesting downside. Another hint is that the RSI moving average, represented by this pink line, is suggesting a continuation to the downside as well. This is very likely to face immediate short-term downside. Now, the 6 hour is suggesting a continuation onto the upside, but like I've mentioned before, when we're in the deep areas of the bear weakness percentile, we're likely to be gravitated into the bear strength percentile. And you can see here that we're getting a hint from the moving average of the RSI that it is still on a continuation to the downside. The daily RSI, since we already saw the 12 hour with the divergences, is suggesting a continuation to the downside with a significant pivot to the downside. And we are now in the deep areas of the shallow areas of the bull weakness percentile, which means we're going to face a gravitational pull right into the bear weakness percentile. So just out of curiosity, let me see the buy daily. Buy daily is also suggesting downside, and this might be corrective here. Oh man, the 3-day is also suggesting a continuation onto the downside with a pretty significant pivot. Okay, so yeah, it's telling me that there's still a bit of indecision, but the price action and technicals and statistics are favoring the bears in this situation. We may face some immediate short-term upside. There is the potential to where we can let's turn on these EMAs here. There is the potential to where we can actually use the 7-day exponential moving average and the 50-day simple moving average as a form of resistance before us continuing on to the downside. So we could see a little bit of upside if we take consideration of our time frames here. Since we're in the shallow areas here, or the deep areas, we can actually make ourselves just up a little bit before continuing on to the downside. Similar here to the 6 hour, some upside before a continuation. That's what it's looking like for me right now, you guys. I'm not a financial advisor. Please take whatever I do show and iterate within these videos as a form of entertainment. I can't actually suggest for you to buy or sell any assets. Okay, so do your own DD and we'll be okay. But this is what I'm looking at, you guys. I'm not following fundamentals or anything, but the price action is indicating potential bearish price soon, and I wouldn't actually suggest any entry just yet. But unless we did reach this incredible demand zone right down here, which has a gap range of 60 cents to 88 cents. Okay, so this is a pretty good place for me to leave off the video. If you have any questions or concerns, reach out to me on Discord, on Twitter. I'll make sure to leave the links in the description below for you to consider joining the trading community in Discord called ARCa. But with that said, I wish you a good rest of your weekend, and I will catch you at the bell on Monday. Adios.